Welcome to today's webinar. We're really excited to get this webinar going. We've been receiving a lot of feedback from both managers and board members that they're excited to be part of it. We had close to almost 200 plus people that registered for the webinar. So it goes to say that there's a lot going on in our community association management space. A lot of it has to do with the new legislation. A lot of it has to do with the impacts that insurance has had on many associations' budgets the past 2 years, and no one sees any end in sight. I'm sure most of you heard this morning that Farmers is now pulling out from the Florida market. So very challenging times, but very testing times for community association managers and board members. However, from these challenges, opportunities always arise. So today's webinar is going to be focused really on budget strategy for community associations, trying to get ahead of budget season. This is, most individuals at this time are really having vacations and having good times, but for the community association management space is when we start to prepare for the busiest season of the year. So I have the honor and pleasure of having two amazing individuals here on the webinar. So I'll let you each do your own introduction. So Alex, why don't we start with you? Say something a little bit about yourself, the organization, your organization, and then we'll go to Pedro.
So I'm Alex Leonardo. I'm the managing partner of Leonardo and Company. We do comps and reviews and audits for condos and HOAs all the way from Stewart down to Key West. We've been doing this for over 15 years and always involved in this space, in this arena of regarding condo and HOA world. And yeah, that's who we are.
Excellent. Thank you so much, Alex. I know it's we've been working together for years. Has nothing to do with the ball heads, really has to do with the quality of work that you guys do. But ultimately, want to thank you for being here today. You and your team do a fantastic job when it comes to the audit. So next up is I have the pleasure of having my business partner here, Pedro. You want to say a little something about yourself and the organization? You're on mute, Pedro.
Now?
Yes, loud and clear.
Okay, perfect. So my name is Pedro Garcia. I'm CEO of Affinity Management Services. I have a background in a little bit of everything, operations and accounting, and that's really helped me do what we do best in Affinity, which is we support our community associations, leaders to accomplish their vision. A lot of what I get involved in, besides running the operation, is really a little bit of specialized financial and project planning for select clients in our portfolio.
Excellent. Thank you so much, Pedro, for joining us. I think this is your first webinar, so we're breaking you into it. Really excited to have you on. As for myself, I'm the CEO and co-founder of Affinity Management Services. Really, what we do here is we focus on aligning, executing, and delivering. So aligning to your vision, assisting you in executing that vision, and we do it by delivering guaranteed results. So we're super excited to have you all here. We have a combination of, as I said, board members and managers. We do have the Q&A open, so if you have any questions, just go ahead and put your questions there. Alex, Pedro, and myself will do our best to answer those questions, assuming they're relating to today's topic. If we don't get to it, we'll provide our contact information at the end of the webinar, and that way you can reach out to us individually and we could do our part to be able to assist you. So we're going to go ahead and launch a poll to get an understanding of who we have here today, and that way we can make sure that we're addressing today's webinar really to the participants that we have on today's call. So why don't we get started here? So Alex, let's go ahead and start with you. So we're focused here on budget strategies. What are some of the essential components that should be included in a budgeting strategy for community associations?
What should be included, and the way boards are really look at these budgets, you're looking at the cash outlay that you have for the coming year. And not only that, but also making sure that you're aware of the possible increases that are coming along in regards to those expenses. So one of the best practices you'll see management companies do, et cetera, they'll call up the vendor, they'll find out, okay, what's going to be the fee for the coming year, what's the new rate, et cetera. And those are the kind of things that a board has to make sure you're including. Other things that are less known that are required and you should do, you should be looking at any shortfalls you had in the prior year. Do you need to replenish that? You got to look at your working capital. Do you have enough working capital? Those are the kind of items that you want to make sure you addressed in your budget process.
Excellent. Thank you so much. So Pedro, what are you seeing from the management side? I mean, I know in the business, that's one of the areas where you oversee, and now that we're really getting into the season, what are some of the strategies that you're putting together with your team to execute, a solid budget for your community associations?
So in terms of strategy, I think when we all talk about strategies, we want to focus on what the outcome is, and in most cases, the outcome of these budget meetings, the outcome of the budget process itself, it really should be a solid financial plan that the community could get behind of, and that means that the components involved in the strategy have to involve not just solid and factual financial projections, but also governance involvement, maybe from the treasurer, from the financial budget committee, and proper disclosure, and maybe even involvement through town hall meetings with the community, particularly for condominiums. The impacts are very large. They're getting hit in at least 4 different major ways. And it's important that you have all those components in place in terms of communication, actual planning, and real independent sort of involvement from a committee or a treasurer that can really put together the best budget process possible.
Yeah, no, you're completely right. When it comes to, the condos, they've been getting hit from all sides, whether it be, the new structural integrity reserves, the SIRS, whether it be insurance increases. So I think that point that you touched up on the communication is very important. I know we're going to touch up on that a little bit later, but for the board members that we have here, which we have about 66% of our listeners here today are board members and 60% are condos. So it really goes to show that they're doing, at least they're taking their proactive measures to be able to understand and educate themselves on what steps they should be taking for their communities. So Alex, many times we talk about, what are the strategies, but, I think it's a great way to learn is, even as a business owner, sometimes you learn the best is when you make mistakes, when you take some risks and you make mistakes. So the same goes with associations. Nothing is perfect. So what are some of the common mistakes that you see either associations doing, both self-managed or associations that are professionally managed, some of the common mistakes or pitfalls they should be avoiding? And maybe if you have a story to tie to one, that would give them an example.
So, and I want to make sure that, this is something that I want to tell everyone, and especially the public, and what I'm seeing, me right now, there's an uptick in the amount of boards asking me to speak in front of communities. And I haven't seen that in a while. And the reason why is because the catalyst for that, a lot of budgets were increased just to the insurance, right? That's been a struggle. But I seen what the domino effect of that has been. The minute you have those material increases in the budget, the first thing these unit owners start to do is they start to question, well, what's going on with the rest of your expenses? Is this really the increase that we need? And they go back and they start looking and questioning the boards on the past 2 or 3 years. And what was the experience? Where did you go over in your budget, et cetera? So that's the standard. The standard for the boards now are getting higher because these budgets will be increasing. And I'll give you, we do hundreds of these, and unfortunately I get to deal with the filed complaints. I deal with DBPR, and it's interesting what is said in law and what DBPR interprets. And I'll give you a perfect example of, you want to make sure that your budget process is airtight. Pedro mentioned having various parties involved, be involved as from a board's perspective. Put you go through those revisions. It's a good thing to go back and forth. But a little unique tidbit that I would add regarding budget, when you're preparing that budget and you have your property manager, it's good for him to write comments on the right-hand side on those drafts that your unit owners will never see, right? But it shows the work that you put into it. It's, hey, I called my vendor for my pest control and or et cetera, and the increase was 3 or 4 or 5%. You want to be able, if you're ever challenged and it gets to that point with unit owners, you're showing your due diligence, you're documenting the due diligence of the board, where you're actually, hey, listen, we did call, this is what they told us. And mind you, 6 months later, like what happened with the insurance, it just increased, people got canceled. But you want to document that the board did their job, because you're only as good as the information that you had at the time you do these budgets. And remember, you're doing these budgets now for next year, and you're being held to that. So I always like that that approach in regards to the budgeting. When we talk about mistakes, it's boards could do a pretty good job of looking at their admins or administrative expenses, their contracts, their insurance. The repair area, the repair and maintenance is the hardest part to predict.
Okay.
No doubt about that. But things that are always people miss is, do you have your working capital? Do you have the working, which is, by the way, tends to be anywhere between 1 month to 3 months of working capital. Can you afford that next coming year going over budget because you have a repair that was unforeseen? Are you ready for that? Do you need to add another line item in your budget stating you have a shortfall, or you need X amount because you don't have the working capital you need for those unforeseen circumstances? So I always like to tell boards, be know your audits, know where you stand financially. For example, I always enjoy when I get the treasurer to say, hey, the audit is done, but can we talk about it? Let's just go over it. And it's a great way to see what a CPA and a professional is just looking at from the outside looking in. And it gives you an idea of where you're at as of that day. And there's nothing better than to go into your budget meetings knowing where you stand, where you're weak, where you need more money, etc. And then you deal with your management company or your bookkeeping accountant, and you're preparing a budget with all the encompassing components of preparing a budget.
Correct. No, those are some excellent points, Alex. And I do see the same as well with boards. I know, at least from our perspective, we are definitely trying to get our CPAs much more involved, because being in management, we rely heavily on the professionals that we work with. So bringing in the CPA to be able to provide further explanation, or as you stated, reviewing the prior year's audits and going through that way the residents have a better understanding and they understand why these impacts or these changes are occurring and how they're going to impact their bottom line, right? How they're going to impact their pockets. Because at the end of the day, many times what residents are more concerned of is, what is this going to cost me? They don't truly understand everything that goes behind it. And the way of doing that is really bringing in the professionals to provide that input. So you brought up, Alex, a point that has to do with inflation, and we've been experiencing that throughout everything. I mean, I'm sure everyone has. Mm-hmm. So I want to bring this to you, Pedro. What safeguards, if any, are you looking to put in place in this coming year? We've seen increases in costs with insurance, with labor, with pretty much everything. Are there any safeguards that can be put in place, or what are you seeing, and what are you planning to structure?
I think at this point, inflation has taken sort of a definition or a concept of almost, I don't know, people don't really see it for what it is in their everyday lives, right? And at least for associations, what inflation has meant is that whereas before you could hire a janitorial worker, a front desk worker, an admin worker, entry-level wages were, minimum wage to $12 an hour. Nowadays, quite honestly, those entry-level jobs at those rates, simply put, are no longer sustainable. Someone would rather drive Uber, deliver food, than go in a community and deal with difficult situations sometimes. So definitely, you have to understand inflation for what it is, and what it means to the community, which means that all of those services that are driven or executed by what usually was called entry-level roles, and this will be front desk, admin workers, all of those positions. You have to look that these wages have significantly increased. We all know in the state of Florida, the minimum wage is scheduled to go up every year, every September. There is a scheduled increase. And at this point, the law doesn't matter anymore because most of our large businesses have already sort of moved past the legal requirement. And, you know, you see these wage increases going up drastically. That's what the current impact of inflation. In terms of the actual, what we can actually do about it, frankly speaking, I think what an association is willing to do about it has a lot to do with what its level of expectations of services are. If unit owners or residents in a community have a quality of life expectation that they want front desk, that they want so many days of janitorial service, and all of these things, then honestly, this is just a cost of doing business nowadays. This is what it is. You have to face that reality, and we have to face it in a factual manner. Other ways of dealing with it, honestly, are really, you know, looking sharply at what the residents really expect and seeing if there are alternative services that could potentially meet those expectations. And that's very much in a case-by-case scenario, community to community and service to service. It's not really a one size fits all sort of solution.
And I would add to that, the one thing I noticed, I remember I was on a call the other day, you know, with the amount of obstacles and pressures that boards are under, with the cost going up, you know, one of the toughest things with the lower, when you don't have that competitive hourly rate, you're going to have turnover. So there's going to be inconsistencies in the service that you're providing to your community. So it's something that you're dealing with, you know, when your hourly rate is not competitive.
No, absolutely. I mean, actually, we just brought on a client, brand new development of the clubhouse, and unfortunately, their prior experience was that they didn't really have a consistent clubhouse and amenity schedule because they didn't know when the people were actually going to show up. And these were unfortunately, you know, the people that were there before from prior management and all of that. It was an issue where they were underpaid for what they were expected to do, and they didn't have a whole lot of motivation to show up to work or even to do so on schedule or the right way. So it's definitely a very difficult labor market out there, and any service provider that requires these entry-level workers, quote unquote, at this point, we have to understand that these are now high-value workers. I mean, someone has to do the job, you know, and we have to accept that.
Yeah, no, it's an important topic that comes up because in most associations, especially those that have an on-site team or have any type of personnel, that's a big ticket item within the budget, which is why I'm sure the two of you are bringing these points up. But as you stated, Alex, you have to be very competitive in today's market. So you have to balance out that challenge of trying to keep budgets where you want them to be, you know, not increases too high, but also where you don't have that consistent turnover, because that consistent turnover does create animosity within the community, does create challenges for everyone, not just the management company, not just the self-managed community, but there's recruiting costs, there's training costs, there's all these hidden costs that are part of it that impact the association. So whenever you're doing the budget, I think it's important to really just lay it out. What we're saying here is you have to keep in mind, are you competitive? Are you in a place where we don't know when inflation, it has been coming down, with core inflation still, it's been challenging. Rates, right now we're hearing that the Fed is going to do 2 more rate hikes. So what are you going to do as an association to make sure that you're presenting the proper budget so you don't find yourself where you're digging a hole in the coming year? And there's a big topic that we're going to touch on next, which has to do with the milestone inspections of structural integrity reserves. But when you're stacking all these things up, it's challenging. But ultimately, as a board or as a manager, it is your responsibility, or the way the statute states, it's your fiduciary responsibility to advise the residents of what is really going on. So, you know, we've spoken a little bit about strategies. We've spoken a little bit about what we're seeing with inflation and what we should do. I think it's important to really start touching on that hot topic that has to do with the SERS, with the structural integrity reserves for the associations. So just want to give a quick high level to our listeners. Really, what I'm talking about has impacts any condo association that's 3 stories or higher. You are going to be required to do a structural integrity reserve study. All right. And that structural integrity reserve study is going to comprise of about 9 components: your roof, structural items, including load-bearing walls, primary structural systems, floor, foundation, fireproofing, plumbing, electrical systems, waterproofing, windows, and any item that has a replacement cost of exceeding about $10,000. So that's pretty loaded there. And the reality of the situation is that those associations that don't have any reserves, they're going to find themselves in a very difficult situation. And this is all going to come into place. You should have it by the end of next year. So what I want to bring to light is, I guess, from your side, Alex, is, are you hearing your clients already talking about it? Are you, especially those clients that maybe don't have reserves or have a limited amount of reserves? Are your clients doing anything about this? Are they preparing for the coming year to potentially increase or start adding some reserves? If you can talk to us about that, about what you're seeing from your clients.
So a few things. So I remember back in January, our firm had our annual, it's a required meeting for our firm, where we have our annual audit meeting and we go over all the new requirements for the year, et cetera. And it was interesting speaking to all these auditors, and we had a few auditors that have started seeing the structural reports coming in, and it was just the beginning of this year. And, the numbers are for a lot of associations are coming in high.
Yeah.
These are numbers that they're dealing with that they've never had to deal with for the structural side. And what I've seen is, boards are looking at it from the perspective of they're trying to start saving now, where, they're putting more money away in the reserves. Communities that never put any money in reserves are putting something in. Like, they're all trying to reduce the impact that's about to happen once this becomes a full requirement, and you're not going to have an opportunity to waive it at all. And it becomes part of the report. But it's been interesting. I've seen another board where they've been super involved. They've had engineers on the board. The community was lucky them to have. They got in front of it. They've been working on it. They started funding it this year. And that's how they worked on it. So they're getting really prepared. Some of them have done a good job of dealing with it. But it's definitely making sure that you know where you stand as a community, because the impact is going to be material when it occurs.
Of course, no, it most definitely will, and a lot of it really depends on each particular association and where you are in your business cycle. Where do you stand with your finances? Where do you stand with repairs that have been done, if they've been done? It's like I've been saying in many webinars, and I'll repeat it again because I just find that it's important to know. The next couple of years, it's going to be a challenging time for board members, managers, and even service providers. It's going to be very challenging because many associations have had budgets that aren't really true to what the true expense is for that community. So now that, reserves are going to be required, which, by the way, I'm very highly supportive of it, because once we get past this 2 to 3 years and we get to what the true cost of living in a condo association is, the reality is it's going to make the life of the board member as well as the life of a manager much easier. Because many times we find ourselves in a very difficult situation where we're unable to make repairs. We're unable to really push projects along, because I get it. As board members, these are their neighbors. They don't want to increase fees 10, 20, 30, 40, 50%. But now that the money's there, now though they should do, or you would expect everyone to do, what is required for the building, which is paint the building, which is change the roof, which is do what needs to be done for the community. And that in turn gives you happier residents. So I try to look at this in a positive light, but ultimately it is going to be a very challenging time. So
And I would add to that, Rafael,
Sure.
one of the things, it's so interesting what I've seen over the last 15 years with communities that were putting the money away and the ones that weren't.
Yeah.
It's funny, in the beginning of this call, you were mentioning hidden costs.
Mhm.
I've seen boards that have worked really hard, right? Like they have so much empathy for the community, for the unit owners, and maybe they didn't ask for enough money as they should have, right?
Yeah.
But what happens? Now this gets taken away. I seen it during the insurance phase, these enormous increases, and now they get questioned, and people are mad with them for not asking for the right amount of money.
Yeah.
And think about that. And then what happens? There's a level of distrust that happens. The board gets kicked out. You get a new board. And they spend more time looking backwards and looking forward in a moment where they are needed to deal with these major challenges. So, but I can't say, it's what I've seen and with the cost, I had so many associations that we considered small that yes, they had revenues of 500, but they had an operating, they had a reserve. And it was consistent leadership. You used to go to the board meeting and there was barely anybody there. And that was kind of a good thing. It was like people understood where they stand, et cetera. But now I am seeing so many associations where they require special assessments. There's a lot of fluctuations, but I agree with you. I believe there's a light at the end of the tunnel when you get to that other side.
Yeah.
If you think about it, they're going to create a standard that's not going to heavily rely on a management style of a board where someone might be not wanting to spend, et cetera. There's just going to be a standard on what you're supposed to spend.
Yeah.
And once you get that going, then the increases for the most part should be foreseeable on a more consistent basis every year. And it would help a lot. But yes, I totally agree with you. And what needs to be done in the next 3 or 4 years. And more than anything, it's the ability to be innovative.
Yeah.
I can't stress enough to the board members out there. You start thinking about yourself. I love when board members get involved because they ask enough questions to force the professionals to think outside the box sometimes. It doesn't matter that you have the engineer, he's an engineer, he did the reserve study. If you start asking the right questions, et cetera, you could get the type of reserve study on the non-structural that you would expect. I have board members that will challenge the engineer, like, hey, that's not the cost. I had the management company call the two other roofing companies. This is the real cost. And you sway your reserve, your engineer to put the proper amount that you believe in your heart that's what belongs. That's the current rates for to do the work at your community. So I can't implore more than that being involved and just being that outside monitor that you're doing as a board. You monitor your professionals. That's your main duty for all intents and purposes. It's such a great way to get to the right point, and where you're trying to achieve.
Right. Excellent point, Alex. And ultimately, it goes back to what we've said a couple of times. It's really working closely in partnership with the professionals. Ultimately, it's bringing in everybody to the table so that, the more collaboration that exists, and I like to say the more positive collaboration that exists, the better the outcome that's going to be for all parties. Yes, it's challenging throughout those times, but if you're working in collaboration, you will get that. So Pedro, I want to bring you into the conversation because, we've had to deal with it with some of our clients where we've been dealing with it, one in particular in Aventura, where we've had to increase a significant amount because I know we're making the recommendations of, starting now, not waiting till next year. So if you could talk to me about what recommendations you're providing the team with regards to communication, with regards to even how to get it fully funded or how to catch up to those numbers that are necessary.
Yeah, absolutely. So we're dealing with quite a few clients. Obviously, this is all falling on the condos. You're dealing with the labor inflation, the insurance increases, the reserve requirements, and then the milestone reports and repairs. All of this has really converged into a very significant impact on all the condos and them dealing with these financial challenges. I think the number one thing from a management perspective that sort of really addresses some of the things Alex was saying about what the community should focus on is really proper communication. The more communication, the more transparent the information is from the beginning, the better it is, because then you have less of this turbulence over accusations and board members, changing for no reason whatsoever, and people investigating each other for stuff that really most of the time doesn't require a whole lot of investigation. I think if from the beginning there is a proper educational process where the residents are fully aware where they're at in terms of all of these issues, where they have to get to and how much it's going to cost, I think it really puts everybody on the same page with, okay, we have to do this together as a community. More importantly, it really puts the board members on the leadership role rather than on the defensive or trying to excuse anything that may have happened in the past. So real strong communication is the key, a fundamental key to all of really achieving all of this. So that means town hall meetings, regular newsletter updates, all of that is really what's the most important thing. The next thing is you really need to rely on professionals. That means bringing in the right experienced manager, the CPA, the engineers. You have to have these people at the table, and the attorney, of course, ready to help and ready to advise and facilitate anything that may need. The board is not going to be equipped to deal with all these challenges all at once. Very often you throw all of this in one pot and it just becomes overwhelming. And more often than not, there's a factual sort of misunderstanding of what needs to be done and a failure to understand the benefits of some of these things. Obviously, the benefits of fixing the community are immense. Property values stabilize, you have an improved quality of life for the residents, and overall, people stay there longer. Now, on the flip side of that, if you fix the building up, folks, that means you can do revised insurance appraisals. Potentially in this market, it's a little bit difficult, but insurance prices could stabilize, if not, maybe decrease. On the flip side of that, if you see a convergence, you may not have to get that full amount of reserves you thought you needed to get, because you already fixed the building in certain those structural components. Therefore, essentially your expected life expectancy for each of those components has now started at theoretically zero, because now you have to start from scratch. So in other words, you're not in a deficit on the reserve if you've conducted some of these things, some of these repairs, and you've gone through the process of doing some of these milestone reports. The big challenge is really getting everyone on the same page with what they want to do and how they want to do it. And oftentimes that really
Oh,
Yeah, I think he froze there. But yeah, that was an excellent point that he was touching on. That again, every association is unique, so it's important to look at your particular association. I know many times board members want to compare one building to, let's say, one building to the left of them and the other to the right, but in reality, they're different, because if one building, as Pedro was mentioning, has done their 40-year, 50-year, they did their recertification about a year or 2 years ago. Now they come in and get their structural integrity reserves. I won't go into the milestone because that's not the webinar for today, but they did their structural integrity reserves. They may realize, okay, we're not too bad, because as Pedro stated, we have 20 years or 15 years, 7 years to redo the paint. So again, you need to, as an association, you need to look at your particular business, because that's technically what it is, individually. You could benchmark with others, but in reality, you need to look at yours individually. Gary asked a good question here. Gary asked a question is this common law for small HOAs without recreational facilities? So Gary, to answer your question right now, this was written for condo associations. However, being in the management field for over 16 years now, we do the same for HOAs. We highly recommend having a reserve study done. That way you're in the position to make the repairs that are necessary. So in HOAs, it's totally different. It's not required to have a structural integrity reserve. However, we do highly recommend that be done. I want to give, David asked a good question. I want to bring you into this, Alex. David asked, Right now, the structural integrity reserves, do they need to be separated in a different bank account? And do you know if the structural integrity reserve is required to be in a separate bank account as well?
At the moment, no, I don't believe so. It's part of the reserves. When we had an audit that it was a month ago that we issued. We did a nice job. We did a new schedule and we broke out structural from non-structural and really provided that presentation of what is required to be in your reserve account. But for all intents and purposes, it's still a reserve account, one reserve account for all. But I would tell you, David, it'll be interesting how the industry adapts when those schedules are presented, where you're showing the estimated life and replacement. Do you break out those two? And now you have more of here's your 9 or 10 items, whatever they are, that are structural, and you're labeling it, you have a subtotal for that, and you have your non-structural separate to really show that transparency of these two different items. Because for for everyone here, understand the structural, it would, the fully funding amount, it will be the amount that the reserve study is, right? But the non-structural, there's still you might have an opportunity if you have a majority vote to reduce your non-structural. But now it requires a supermajority. But the idea is you might want to separate that in your audit report or review or compilation.
Great point. And I want to add to what Alex mentioned. It's important that you bring along your association attorney. So that's a good phone call to have with your association attorney. I agree with Alex 100%. Those reserves do need to be in just a regular reserve account. There's nothing that I'm aware of, and I'm not an attorney, that says that the structural integrity reserves need to be segregated in a totally separate account. But again, it's your fiduciary responsibility to make sure you're working with a professional. So have a call with your CPA, managing company, and attorney. That way you can confirm different information. We have one of our constant listeners who's always in our world named Barry, and he always coming up with creative ways, and is working with many attorneys and our legislators to come up with creative ways on how you can work around things. But ultimately, you do need to bring your attorney or CPA into the picture. So glad to have you back on, Pedro. It seems like you were disconnected, but I finished up your where you were heading with your points. So let's switch gears here a little bit. Well, actually, before I switch gears, I want to bring up the conversation, Alex, that we were having prior to the webinar, which had to do with how to fund, these structural integrity reserves. So, you're hearing special assessments, you're hearing lines of credits, you're hearing, again, depending on that business and where they're at in their cycle. What are you hearing from your clients of what strategies they're taking to get to that funded amount that they need to have within the next year and a half?
So a lot of them are, one of the best practices when you're also dealing like with 50-year certification, like they're getting their building up to code, et cetera, is that you do obtain a loan. And what's typical in our industry, and where you're dealing, and you really should deal with what we call condo banks. They tend to have the products that are really meant for our industry, meaning the underwriting is very easy, and the idea is you get a line of credit for X amount of time, because what you estimate the project to take, and you do all the repairs and everything that you need, and then that line of credit gets termed out, and it gets termed out X amount of years, and at the same time, simultaneously, you pass a special assessment. And the purpose of the special assessment is to pay the loan over time. That tends to be what communities do. Some communities don't do the special assessment. They include the interest and principal in their annual budgets. They do it that way. But those are circumstances that you would discuss with your management company, your lawyer, et cetera, and see what's best fit for your community.
Correct. Yeah, excellent point. Again, bringing in those partners, and the reality is the bill's still not perfect. Let's just face it. And ultimately, legislation can never have a perfect bill because there's always different ways of looking at something. You may get one opinion from one attorney, a slightly different opinion from another attorney. So it's just important ultimately to, as a board member and as a manager, which is ultimately we're here to protect our clients, our board members, is we want to make sure that we have some opinion from professionals. So that way, we're following our business judgment rule, or the board is. And the same thing goes as a CAM, that, we've consulted with our CPA, we've consulted with the attorney. So that way we're doing things in the way that they should be done. So Pedro, from a management perspective, what recommendations are you making to the regionals or to the clients when it comes to getting it funded? Or would you recommend getting started today? What's your approach and your style when it comes to these structural integrity reserves?
So definitely something we've been already starting to work with our clients, and what we are informing everyone to do is, at the very minimum, it's a two-part process. The first stage, which is education, meaning inform your unit owners, inform the board, become informed, take ownership over that knowledge, really understand what's happening, what the requirements are, and disseminate that information so that everybody's on the same page in the community and it's not a surprise to anybody. Second step is really understand through the engineering reports, through the reserve study specialists reports, really understand what the current conditions are. And I think Alex mentioned earlier, it's extremely important that you work with the manager and the board itself, or the committee that's involved, really take a strong interest in these reports, really to determine if the numbers that are coming out of there align with what the community needs and it reflects what the community's needs are. You want to work with an engineering company, and you want to get your reserve study from a company that hopefully it's all under the same roof. If you can get your milestone report and your reserve study report from the same engineer, that will be the most ideal thing. It may not always happen that way. And the reason why I say that is because at the very minimum, it's basically the same people that will be able to tell you, okay, these are the milestone reports, these are the requirements. After you've completed all these things, this is what your reserve study will look like. And there wouldn't be any major redundancy of the work that's required. If you have it separated, it's not terrible, but you will need to work with someone on the reserve study side that can take into account the engineering reports, the engineering study, and not necessarily feel like they have to start from scratch, and at least understand how to read those in a way that benefits the reserve study and reflects that. So for sure, that stage of really educating the board, really educating the unit owners, and then really beginning that process of getting those reports out of the way as quickly as possible. Now, in terms of financial preparation, at the very minimum, no matter what you do, no matter what the reports say, I think everybody has to understand you're going to have to increase. You're going to have to pay something here. So for sure, start putting something away. At least a 30% increase, at least a 30% contribution to reserves, so that you have something and you're building up the expectations for the residents. As you get closer to that sort of point of clarity with your reserve study reports, then you can start changing or modifying the message to the residents, and you can start changing the budget. But you have to start building that up, and you also have to start setting expectations more than anything for the residents.
Excellent.
And I can't stress enough on that part, by the way. I can't tell you, it's amazing walking into these board meetings, speaking to the unit owners, and I'm there just to speak about the material increases that they've had on the budget. And you could just tell that the public really does not know. They don't know the structural and non-structural thing going on with the reserves. They don't know. And it's going to be up to the boards to educate. If you grab your lawyer and you do a Zoom call, they spend an hour just with the unit owners, just months before any of this is going to happen, that you at least educate them, listen, these laws are coming, etc. Like, just think of innovative with your management ways to educate your community, because it is coming. And I'm telling you right now, I'm walking to this meeting, they do not know. The boards, somewhat know, some of them do know, but it's something that's coming along the way. I wish in our industry, I know a few years back when they had the boards have the board certification, they should have every unit owner, every time they sign, at least listen to a 20-minute video, just listen to something and be educated on what it takes to run these operations. Because it's getting, it's a very robust process it's the daily operation of a community. And there's all these new laws that have come across. So, that's my take.
That's a great point with the video as a welcoming instead of the packages. Now video, I'm stealing that one. So we may be applying that soon. But I do want to provide some clarification. In all fairness, I see a question here. What's the difference between milestones and the SIRS reports? So we haven't touched too much on the milestone because this is really a budget course and so forth. But just in all fairness to this individual, in case anyone else is still not sure. So the statute changed 2 years ago. There was a glitch bill this year that's requiring any building now that's 25 years or older will be required to do a milestone report. So that report is going to be conducted by an engineer and so forth. They'll go into your building, and I don't want to go too far into that. The SIRS, which is a structural integrity reserve study, that's for any condo association 3 stories or higher. So that's basically a reserve study. However, this reserve study does need to be, can be done by a reserve specialist in conjunction with an engineer working together as a team. So I hope that clarified the difference between a milestone report and a SIRS or structural integrity. What Pedro's recommendation was, is if you're falling in line with both, to save on costs, the ideal thing is to try to do them both at the same time. So just want to provide a little bit of clarification on that in case anyone else had any questions when it comes to that.
And by the way, Rafael, I apologize for interrupting, but
no worries.
One thing I would add, one of the things I've noticed as an observer, some of the more traditional reserve companies, they're getting that they're able to provide that services. They're adding it to the services that they provide. So at least the bigger ones, you could tell that they're ready for this, or trying to be ready. It depends how much they're gonna have in back order, but the idea that they could actually competently provide the service, it looks like they can. I'm seeing it with the bigger reserve companies down here in South Florida.
Yeah, good point.
That's actually a good point that maybe we haven't stressed enough. Although the timeline for compliance is apparently, and to some people maybe far away, we need to get started. All of us need to get started on this immediately, because engineers and reserve study companies are backlogged at this point. You can contact any of them, at least the reputable ones. You can pick up the phone and call anyone, and maybe they'll tell you yes and sell you a pipe dream. But the reputable ones, the ones that can do the job the right way and bring you into compliance and give you that sort of peace of mind, you're going to have to understand that there will be a significant waiting period, and you need to factor that in. So the sooner you get started, the better. Yeah,
excellent point. I mean, I think we've been preaching that for too long, but unfortunately, we get it. It's expensive, but ultimately making the decision now is what's needed. So I do want to touch up on something that Corey brings up, and he states, or Corey states, I should say, we hear from residents, why would we need to take out a loan and pay interest when people can afford to fund themselves? So again, these are business decisions that you and your board need to make. You need to understand, can everyone truly afford it? There are accounting ways that we have worked, I won't say from the structural integrity reserves part, but from a loan for, let's say, a 40-year or a recertification, where we've structured ways that if you prepay, you're not paying that interest. But again, you need to work with the CPA, your management company, so that you structure that properly. So later down the road, you don't find yourself with a shortfall in payments or what needs to be done. So ultimately, you have to remember that when you signed up for an association, even as a board member or as a resident, you're looking at things as a whole. You're not looking at it just one person. You're looking at things as a whole. So let's switch gears here. I think, this is obviously a very hot topic, but I do want to continue going on into some more of the budget stuff. So Alex, I want to bring you in. Let's talk a little bit about the role of audits in community association budgets. I know you brought up a great point during our pre-webinar discussion. So maybe if you could touch up on that, and how does that play into the budgeting process?
So, And I'll give you a story. You know, I see that every year I have one of these. I'll have a treasurer that maybe it's been there 2 or 3 years, and he's doing his job, or her, right? They're looking at the receivables and working with the property manager. They're looking at their actual versus expenses. They know exactly why they went over or under for the year. But for whatever reason this year, they'd say, hey, let me talk to the auditor. Let's go over this audit draft that you just sent me. And it's interesting for that individual that is involved, and then they start listening to me, and we start realizing that they have a due to from, that the operating owes reserves 100,000. And they're like, well, what do you mean? And you know, that 100,000 could have been from 6 years ago, right? Before he was even on the board. And it's important. There's these little intricacies that show up in these conversations that educates your treasurer. He's looking at the situation now like, okay, how am I going to deal with this? Because there's techniques you could use in your budgets, and you could go into your budget meeting not only with your operating expenses and where you're at, but also where do you stand as a firm? Do you, as an association? You do have technically a violation when you owe money to the reserves. So are you going to put that in this budget? Are you going to put a piece of it, 50%, because the community can't absorb it all in 1 year, but you do a little piece this year, you do and by the second year you are in compliance. You know, have a plan. That idea, you know, is another kind of like just having a discussion. You know, they tell me on the phone, hey, we're getting insurance money. Oh, you're getting insurance money. Well, there's a whole conversation on that, because there is a tax implication with insurance, but there's ways to completely avoid the tax, and you just got to plan for it correctly. So those are the kind of, you know, I always advocate, go over your audit report and look at the time. You're now in the summer. If you're educated on that side, you know what you're going to go into when you go into your budget season. It really helps in understanding where you're at and where you got to be.
Yeah,
Excellent points.
if I could add a little to that, Ralph.
Sure.
So I think from a management perspective, it's important for not just the board, but the manager to really be in tune and work together with the CPA on these audit reports, whether it's an audit report or review, whatever the assurance product is. It's very important, because the end result should be that the two main reports you get, which is the balance sheet and the profit and loss, or the income and expense statement, those two actually have an outcome, a realistic outcome, a tangible outcome that is very much useful for the association. The CPA is highly focused on producing a audit report that's compliant with generally accepted accounting principles, and as a result, they produce an adjusting entry sheet at the end of their report. That means that your balance sheet will always end up with a cleaner condition, a cleaner presentation, if you carry those adjusting entries over. And with that said, that means that from a management perspective, from a day-to-day decision-making perspective for the board, if the balance sheet is properly structured and the balance sheet is presenting the right information, that means you can do a really strong liquidity analysis, which is your current assets minus your current liabilities. That will tell you in a very strong snapshot how strong the association is in terms of working capital, whether or not you actually have a deficit or a surplus. On the flip side of that, on your income and expense statement, whatever your CPA's final income and expense statement draft is, whether it has a deficit or a surplus, we have to understand, and I think Alex was alluding to that technically should be carried over to your next budget year, or at least a decision or discussion needs to be had about that. So it's extremely important. The role of the audit and the budget really does come together, because it's not just this narrowly defined process of what are going to be my expenses. It should be a broader discussion of what is my financial condition and what do I want it to be. And the budget is just a vehicle towards that, but you need to look at all these components and really have those strong discussions with your professional partners.
And by the way, I'll give you another example. This year, I have a self-managed. They have 150,000 in their operating account, but then we're telling them on the report, by the way, you have a security deposit liability of 100K. Like that, you really were supposed to have a separate bank account for your security deposits. You're in violation there already. You only have 50,000 in your operating. Like these kind of things, pop up because I'm providing this service and I have to follow these rules. And I have to, we as auditors, we write these letters of observations and recommendations. I can't tell you enough how many, you got people that don't read them, and you should look at them. And it's something that you might have been doing for 20 years, but then finding a professional is able to show you, hey, by the way, this is how you're supposed to do it. And there's so many ways to, once you know the issue, I can't stress enough, management companies, they've seen it all. They have to see it every year. They're dealing with it every day. They could come up with innovative ways in how to deal with it, whether it's in that year or over time. Just make a plan towards getting to the right place. And, because let's face it, management companies are putting out fires on a daily basis.
Nah, never. No, these are great points, and I'm real happy how Pedro framed that. It's not just your income and expense. It's the entire picture, right? It's looking at everything. It's not, okay, what did I spend this year? What did I have variances on? Let's move forward. No, it's, do you have 2 months of working capital? Now, do you have reserves? So there's so much more that goes into it. And when you look at that, that's where you see as a board member or as a manager, the value of the partnerships that you have, the value of a management company, or if you're self-managed and your CPA and your attorney. So I can't keep stressing that enough. I don't think I ever will, because ultimately, a lot of the responsibilities, and I get it, boards want to save. But when you look back and you look at your previous audit and you have a conversation with your CPA, you have that sense of, okay, I'm doing what's right for the community. And then you have that sense of pride, and you can easily talk to your residents with those challenges of why you're doing what you're doing. And as you said earlier in the webinar, Alex, is bring the CPA into the conversation, bring the attorney into the conversation, do it over a webinar so it's easier, it's more affordable, and you get the communication that's needed out to the residents. So we're coming up on the end of the webinar. I'm sure all three of us can keep going for another hour or two, but we want to be respectful of our listeners' time. So I do want to be able to give you some time to at least provide a golden nugget or a piece of advice that our listeners can leave with. So Alex, I'll start off with you.
So I guess the biggest one is, listen, I believe you're going to be held to a higher standard because these increases are coming, and you're going to have to check all your boxes, etc. Be hands-on, know what your association experienced the prior year, that current year. For example, if you went over budget for over 100,000, know the 3 or 4 expenses that caused it. The whole board should be with the same message, consistent, because you are pulled to the side and you're asking, hey, what happened? Well, hey, it was the insurance, or etc. You should have a consistent message on what happened and what you're doing about it. Because the idea, and I guess this is I'll add another nugget because I talk too much, but listen, you to just tell unit owners or tell your community, hey, here are the issues, is not enough. You want to identify your issues and have 2 or 3 solutions ready. That's how you make your community feel better, and they can sleep at night and say, listen, these are the issues and these are the options, and we got to pick one, and this is where we're at. And make sure you get to that, because you definitely have the management company or the leadership and the professionals to come up with the solutions, and put it on them to know it, educate them, and they could actually decide with you on what's the proper approach.
Excellent. Thank you so much, Alex. And always a pleasure to have you on. Pedro?
Yeah, sure. So I think the golden nugget that I can really extend to our listeners here is the one that I think you and I here at Affinity always try to educate our board members on, is that's really, a board member is in a position of leadership. If you're in a Fortune 500 company by any other name, board members are not going to be heavily involved in the day-to-day operations. You want to really assert a certain style and method of leadership that expresses, number one, a cultural sensitivity, meaning that you care about your community, that you're informing them correctly, that everybody's on the same page. But more importantly, that you are relying on a management team or on a professional team, okay, such as your manager, your attorney, your CPA, et cetera. And you can trust them because they're qualified in what they do. They've been around the business for a while. And even when you challenge them, they give you the right solutions. You definitely want to rely on them on really strongly. You don't have to feel a sense of pressure to just produce everything on your own. You already work a full-time job, have families, etc. This is a volunteer position. You need to just really put your position, your role, and focus your role on more leadership and let the professionals do the job. Lastly, I think it's important that in that leadership role, you set the right expectations. You should never be saying, hey, let's just keep the fees the same. What we should be saying is, hey, how do we paint the most accurate picture that prepares us for a solid financial foundation for this community? And that will be a better outcome than what often happens, which is a lot of firefighting because things start coming up and, the wrong leadership and the wrong expectations were being set.
Excellent point, and very well said. I couldn't agree with that anymore. For me, I guess the biggest nugget that I would like to leave our listeners really has to do, again, just touching up on what Pedro said and what Alex said throughout the webinar, is really just dealing with the professionals, working with your professionals. But the one that for me is always looking at things in a positive light, working in partnership. Ultimately, that, many times, sometimes relationships, it becomes like it's me against you, and those relationships never are successful. They may seem like you're getting what you're getting, but you're truly not. So you get more with honey than you do with vinegar. So what I say is making sure that you're working in partnership. And if that partnership is not working for you, then just have an open and honest conversation with the person in front of you and say, look, we're going to need to make a change, or this is what I need corrected for us to move forward. And then if they don't correct it, you move forward in a different direction. Because again, as Pedro stated, whether you work or whether you're retired or as a CAM, you shouldn't be in those kinds of toxic relationships. Not good for either side. So your position is not easy, just like ours isn't. So let's just keep it, very professional, work in having positive partnerships, and then the outcome will start to come together if you're doing it in that fashion. I do want to take the opportunity to thank everyone behind the scenes that helped put this webinar together. So my team, I want to thank several of my managers that are on this webinar. And more importantly, I want to thank the 66% of board members that attended and the 24% of managers. It really goes to say a lot about what we've been talking about, which is leadership, your dedication to your communities, your dedication to your profession. So I wanted to applaud you for that, because I know many times it doesn't happen. So we want to make sure that we do that in every single webinar that we have. We will continue to have webinars, so stay tuned. Make sure you visit our website, managedbyaffinity.com. We will be posting this video on our YouTube page, managedbyaffinity.com, and feel free to subscribe to our YouTube channel. We'll make sure to post it, keep you all informed. Thank you all for attending, and I look forward to seeing you in the next one. Have a good one, everyone.
Thank you.
Thank you, everyone. Bye.